want to clear the air and make sure that you guys have all the data on what is driving this market and what is different from the last housing market crash that we had. Because I think at the core of a lot of the misconception, where I see a lot of people, making assumptions, right? The market's going to crash because prices are just inflating high and it's inevitable. And this happened before. I've seen it all. The comments are online. Sometimes we share houses and I get the armchair appraisers basically leaving comments on my posts. And I'm open for, topics and discussions and debate. I love this. It's how we learn. It's how we share. But you have to be educated in this and you have to understand what is going on. And you have to take the emotion out of this and really look at statistically, what's the data showing us, right? What is going on out there? So what's driving this particular housing market is a shortage of supply right now. That's as simple as it is. What you guys are seeing is supply and demand, right? We're also seeing it in the automotive market right now, for example, due to COVID hitting. Manufacturing is down right now. So, automotive manufacturing is down. There's not as many cars on the road. You have things like cars basically running through the end of their shelf life, right? They're basically being taken to junkyards. They're demolished. They're getting into accidents. They are just basically breaking down. I mean, long story short, there's more cars being consumed than what's actively being put out there. So what you guys are seeing with automotive prices is they're going through the roof right now, right? You just can't get them. There's more consumers out there than there are cars on the market, driving the prices up. We're seeing the same thing going on in the housing market right now. There is a massive, massive, massive shortage in houses. Now, what I want to point out is one of the main differences right now is in the previous housing recession that we had before it happened, what led up to that was we actually had an oversupply of houses. It wasn't a situation where inventory was low, right? So for each individual buyer looking for a house out there, it wasn't necessarily the fact that there wasn't enough houses on the market. They were actually building houses at a very fast rate. You guys saw it, right? Subdivisions going up like crazy, things being built like crazy. But the backside of that really propelled that was loose lending standards, right? You had basically balloon mortgages going out there. We had predatory lending. For those of you guys that are in the older demographic than, the younger millennials that obviously weren't buying houses at that time that went through that, it was very easy to get a loan at that time. You could basically go in and say, hey, I got stated income. You were able to refinance, a lot of equity out of your house, up to 100% of the equity, right? It just put a lot of people in a bad position because they were borrowing more money than they could actually afford to pay back, right? So as houses were being built, builders were building houses like crazy. People were using these houses like ATMs. They were pulling their money out. They were putting minimum payments down, and it just caused the prices to go through the roof. We also had situations where, lenders were able to work directly with the appraisers. There might have been some influence on their houses were over appraising quicker than they should have. It was like the perfect storm at that time that basically caused housing prices to rise too fast, too many houses being built. And before you know it, people were no longer to make the mortgage payments because they were going so high so quickly. They weren't putting enough money down, so they were immediately getting upside down on their mortgage. Now, and that's another thing we're going to talk about is being upside down on your mortgage versus being upside down on what you totally paid for your house in your equity. Those are two very different things. And again, we'll touch base on that in a minute. But long story short, that is what led to the big recession crash, combined with some other economic factors that were taking place at that time. This market is exactly the opposite, right? I can tell you right now from a lending standpoint, and I'm sure for those of you guys that have gone out and tried to apply for a home loan, it's difficult right now. It's not the easiest process. They go through your financials with a fine-tooth comb. You have to have a certain credit score. You have to have a certain debt to income ratio. And that, if you go to do a refinance, you can no longer pull out up to 100%, 110% of your equity coming out. You're only able to maximize maybe 80% of your equity tops coming out, right? There is way, way, way more lending standards in place right now for people to make sure that, people aren't getting loans that they cannot afford to pay back, basically.